Hey guys, welcome back to another week of fundamental analysis. This week, we are still, like I said on the last video, we are still committed to gold and oil trades only for the rest of the year. We'll see how that goes. If I get comfortable with these two, let's say in the next 3 months, we might add one more pair, but we'll see how it goes. Now, COT report. Last week we saw a lot of change. This week we still see a lot of change. Again, I'm mainly focusing on US dollar now, oil and gold. So big change in sentiment for, look at yen. Yen's even more bearish. 15% in from a long-term perspective, but a 4% change in the volume of 1 week. But anyways, US dollar, same. Oil is actually up 6% in terms of people choosing to go long. Gold is up 1%. Gold is already very bullish, so even a 1% is pretty good. Even if it's a 0% change, I'm still very bullish on gold. So yeah, that's oil and gold are both bullish. US dollar, there's no change in bias. If we go to the data, what came out this the week that was CPI, PPI, and unemployment claims. So you can see all inflation readings are all negative. Okay, so lower than expected. I got to recalculate the federal funds rates. My apologies. I'll do that later myself. But you can see all negative prints, which is lower than expected inflation figures, which is bullish for gold, bearish for oil. Okay, so this is my rationale as well, is that when the market or when dollar inflates, it is stronger the dollar and it is stronger oil, because oil tends to inflate with the dollar. So my reading is bearish. I don't know if that's going to bite me in the bum, but that's what I'm taking out of it. For gold, it's bullish, because lower inflation numbers mean people, you know, the dollar is less attractive. People want to invest in other things like gold, and that's sort of even supported with unemployment being higher than expected. Still uncertainty in the market. You can see gold's got a very bullish reading, 5 out of 12, I believe, and oil's got a very negative reading. Last week's data, so like we said, rates remain the same. So we had federal rates at 5.5%. With some indication of inflation with the CPI and PPI numbers lower than expected. So we might have been, at least for this print, this is a slowdown in inflation numbers, which is actually good, which means rate cuts might be in the picture for this year. Unemployment's also higher this year, and University of Michigan consumer sentiment lower. So just everyone's not spending. Inflation is coming down, which is why the rates are kept at 5.5%, but still we're seeing the economy slow down in the US economy. We're seeing consumer sentiment down, we're seeing unemployment still up, so there's still much to do. This uncertainty is still a very good environment to go bullish on gold, in my point of view. So overall, very bearish on USD due to lower than expected numbers. Lower CPI, PPI might mean rate cuts are still a possibility for this year. And lower numbers on USD or USD strength might indicate people, the uncertainty factor, people wanting to put their money in assets like gold, potentially Bitcoin even. Next week we have sales again, core retail sales. So if we see a cooler reading on retail sales, we know people aren't spending that much. Again, it's just that consumer sentiment, that market sentiment, that people aren't willing to spend. There's uncertainty in the market. People want to save, and gold is a safe haven. Unemployment again, and PMI. PMI numbers would be especially important for oil. If we have higher manufacturing PMI numbers, higher services numbers, that means economy is doing good, and oil, to be used in the economy, which will drive their number up. Take home, inflation seems to be slowing down with the CPI, PPI numbers this week. Just keeping in mind it's one print. If they continue to lower month by month, then the expected rate cuts of this year might be in play, which is bullish on gold. This may be bearish on oil if manufacturing, So oil, just again, oil being inflated with the market. If we still have good economic activity, that's bullish for oil, despite lower CPI, PPI numbers. It just really depends on the PMI numbers and the unemployment, things like that. So I'm still very bullish on gold, slightly bearish on oil, because oil's got a counteracting signal right now with COT being bullish, but fundamentally, at least how I perceive it, is bearish for oil. So, in terms of market, just letting you guys know, I am in a position in gold right now. So if we go out, we had this nice support area here that we got in on a 4-hour. So we didn't get in there. We saw a bit of stagnation here. We decided to get in. You can see it did jump up to around 2.8%. Currently at break even right now. It hasn't taken us out yet. So if it breaks, if it can break this, what I'm looking for is a bit more of a push, come down here and then up. Okay, and as it comes up, I'll trail my stop here, and we're looking to see that, trail it there, and so on. Right, so that's the plan. We will see if that happens. Now oil, you can see it's reached this sort of supply, sorry, not supply, this resistance here. You know, I didn't want to take a sell here. You know, there's a big rejection wick, no point. If I can see something like this, taking the high, liquidity of the high, I might get in for a short from here, but we will see. Just depends on how the numbers want to go. It is on my radar. It is orange, means it's good to go, dependent on the signal print. So I might actually we'll keep it red. I'll put an alert here to see if it tops up. So with the alert there, we want to see it tag there and come down. Let's have a look at dollar on a daily. You can see dollar very uncertain right now. You know, it's just sort of ranging in between this area here, right? No real direction, and with government bonds, yields going down. Still, I gotta really familiarize myself with yields, but that's the trend right now. So, just gonna keep an eye on this gold trade, keep an eye on this oil potential, and yeah, check back in another week's time. Thanks guys, laters.